Ladies and gentlemen, good day and welcome to Popular Vehicles and Services Limited Q4 and FY2024 earnings conference call hosted by Centrum Broking Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shirish Pardesi from Centrum Broking Limited. Thank you, and over to you, Mr. Pardesi.
Thank you, Ranju. Good afternoon all, and welcome on behalf of Centrum Broking. I welcome you all. This call is for Popular Vehicle and Services Limited, and we will have the discussion around Q4 results and FY24 financial performance. I'm happy to state we have Mr. Navin Philip, Managing Director from the company, joined by Mr. Raj Narayan, Chief Executive Officer, and Mr. John Varghese, who is a Group CFO. We also luckily have Mr. Biju Thomas. He is the CEO for Vision Motors Private Limited. Without much delay, I will hand over to Mr. Navin Philip. Over to you, sir.
Thank you, Shirish. So good evening, everybody, and a warm welcome to our Q4 and FY24 earnings call. As Shirish mentioned, along with me, I have Raj Narayan, our CEO of PVSL, the Group CFO, John Varghese, and Biju Thomas, the CEO of our subsidiary company, Vision Motors. I take this opportunity to thank all investors who participated in our IPO. Our company got listed on March 19, 2024 on both NSE and BSE. The total size of the IPO was 601 crores, of which primary was 250 crores. Of the net proceeds of 250 crores, we have deployed 192 crores towards debt reduction for the company as planned in FY24. This will result in interest cost savings for FY25 onwards. As this is the first call, there are a few people on the call with whom we will be interacting for the first time. So I'll give a quick overview of the company before moving on to discuss the Q4 and the FY24 performance. So PVSL, Popular Vehicles and Services Limited, belongs to the diversified Kutikaran Group, which has been approximately 70 plus years in the automobile industry. The group entered the automobile industry during 1939-40 with the commencement of automobile spare parts and accessories business, and this was spread across India. We have since forayed into automobile dealership business by partnering with various OEMs. The group operates as a multi-brand automobile dealership in Tamil Nadu, Karnataka, Kerala, and recently we have forayed into Maharashtra. The group was founded by Sri K.P. Paul and launched and PVSL Popular Vehicles became the first Maruti dealer in 1984, the first set of dealers that were appointed by Maruti across the country. A little bit about PVSL. One, it's a diversified automobile dealership company with a fully integrated business model. We are present across the retail value chain that caters to the complete life cycle of vehicle ownership. So new cars, service, used cars, finance, insurance, distributing spare parts, facilitating the exchange, and operating driving schools. Presence across the value chain helps us in terms of serving the customers better and also increasing the database of customers and ensuring customer stickiness and strong brand recall. In terms of segment presence, we are present across the spectrum of automobiles from EVs to CVs to two-wheelers and three-wheelers. In two and three-wheelers, we are currently present only in the EV category with Ather and Piaggio. As of today, in terms of revenue split, EV, which includes the luxury segment which we handle, JLR, contributes about 60% of the revenues of the company, and 35% comes from commercial vehicles which are represented by Tata Motors and Bharat Benz. In terms of OEMs, we have a long-standing presence and partnership. As I mentioned before, our relationship with Maruti started in 1984, so it's 40 years plus with Maruti. And each of the other OEMs, that is Tata Motors, Honda, JLR, Bharat Benz, we have a long-standing relationship. We commenced our JLR dealership in Karnataka in 2010 under the Markland brand, Honda in 2008 under the Vision brand. In CV segment, we are with Tata Motors from 1997 and caters to the entire range of commercial vehicles offered by them both in Kerala and Tamil Nadu. Our Bharat-Benz dealership is operated under the Prabal Trucking name and is operating in both Tamil Nadu and Maharashtra. We've just entered into Maharashtra in Feb 23. We've expanded our product portfolio to electric 2 and 3-wheelers with Ather and Piaggio. Our Ather and Piaggio dealerships are operated under the EcoMark brand and caters to a wide range of electric 3-wheeler and 2-wheelers. And in Ather, we are present in both Tamil Nadu and Kerala again. So for all OEMs, we have a well-defined corporate structure and brand in place with a separate business head in terms of COO or CEO. In terms of geographic presence, as we are present in Tamil Nadu, Kerala and Karnataka, and recently we have moved into Maharashtra. In Karnataka, we have the JLR dealership and we are expanding our basket there, and we also have the spare parts distribution of JCB and Maruti and Tata passenger cars. We have also made inroads into the western region with Bharat-Benz, as I mentioned, in Maharashtra, in the Vidarbha and the Marathwada region, headquartered out of Nagpur and Aurangabad. So this increases our non-Kerala revenues. So in FY21, approximately 26% of our revenues were from outside of Kerala. In FY24, we are close to 40% outside of Kerala. And we look to keep diversifying this in the coming years. In terms of network, over the years, the company has built an expansive sales, service, true value, and used car network across the chosen territory. Excluding service centers, as on 31st March 24, we have 8 Nexa, 9 Arena, and 3 commercial vehicle showrooms for Maruti Suzuki, 8 Honda showrooms, 2 JLR showrooms, 13 Tata commercial vehicle showrooms, 8 Bharat-Benz showrooms, 6 Piaggio, and 3 Ather dealerships. To give you a more holistic view, we have 61 showrooms and 142 service centers. Other than this, we have 32 pre-owned car outlets, 44 retail outlets and 24 warehouses for our spares distribution business, and smaller outlets in terms of sales, approximately 129. In total, we stretch across more than 400 plus outlets over the 4 states. Coming to our business model, we are unique in the sense that we are present across the retail value chain, as I explained earlier. The integrated business model benefits from the inherent synergies arising out of our business verticals and also diversify our income streams and contribute to higher profitability margins at our dealerships and less cyclicality. We have divided our business into 4 verticals. The new vehicle sales business, along with the OEMs, it's a very important piece as it enables us to drive business for our other verticals. It's important from the integrated business perspective and the high volume business. The pre-owned car business, where we deal in exchange, acquisition and sale of pre-owned passenger cars across our vehicle dealerships. This is decent volume and a reasonable margin business. This vertical helps in having brand recall and brand presence, and also in terms of boosting the new car market other than the aftermarket itself. Coming to the third piece, which is a component piece, which is services and repairs. This is under each of our dealerships, which include work undertaken during warranty period, outside warranty period, paid by the customer, running repairs and collision repair services or body shop services. We offer end-to-end services through our authorized service center that contribute to higher margin revenues and helps mitigate the cyclicality that has in the past impacted some elements of the automobile sector. We also try to leverage the linkages between our showrooms, sales outlets, booking offices and authorized service centers to retain customers and have customer stickiness. So to give you some sense, we have serviced 26 vehicles for each vehicle sold by us in FY24. This vertical contributes to approximately 15% of our top line, and in terms of EBITDA, the contribution is over 50%. In services, it's collision and repairs, that's the body shop business that contributes to a larger chunk of the margin. Our service to body shop ratio stands at 11.5% for FY24. Here again, we are doing a lot of work in terms of increasing our revenue or wallet share, which eventually lead to growth in overall profitability and better returns. Just to wrap up this business, I would like to mention that we are ranked number 1 by Maruti Suzuki, number 3 by JLR and Tata Motors commercial vehicles, and Honda in terms of all India service market share, in terms of the service volumes that we do. The fourth vertical is the spare parts distribution. This is another business in which is a high delta business. Here we have strong relationship with Maruti Suzuki, Tata Motors, both passenger vehicles and commercial vehicles, Ashok Leyland and JCB. This business is operated through our wholly owned subsidiary, Popular Auto Dealers Limited, where we have a presence in Kerala and Karnataka market. It's a high SKU business which we maintain across through 68 touch points, comprising of 2 multi-brand pre-owned vehicles, which is under the brand name Car Trends, 43 retail outlets and 24 warehouses across these 2 states. Currently, we have 3,200 customers, which are basically independent workshops, authorized service centers, and vehicle dealers. For FY24, both services and spares and spare parts distribution did exceedingly well. We expect to grow this business with financial prudence in the years to come, leading to margin expansion. As part of our bouquet of offerings, we also facilitate the sale of various third-party finance and insurance products in relation to the vehicles sold by us and also when the vehicles come for service, extended warranty and maintenance contracts, as well as replacement and aftermarket services. Growth over the years. Organically, we have added 6+ showrooms for passenger vehicles, 8+ showrooms of CVs, and 10+ showrooms for 2- and 3-wheeler in the last 3 years. Here it's very simple. We identified underserved locations, work with OEMs closely, and then set up new outlets and grow the business thereon. Coming to inorganic growth. As part of a strategic plan to expand our business into other states and in other OEMs, we acquired the entire operations of dealerships through a slum sale concept. We have acquired across all 4 states, and such acquisitions were made considering the consequent geographic and dealership addition to our business operations. Post such acquisitions, we carry on the business under our own brand name. We have successfully been able to integrate the business acquired through the strategic acquisitions. Way forward strategy. We have laid out a clear roadmap in terms of our priorities and to scale up our business and have a sustainable growth with improving profitability trajectory. First is diversification in terms of revenue stream, OEM share and product offerings. In terms of de-risking our revenue, we have achieved success to some extent by bringing down our revenue from a particular state, that's Kerala, from a share of 74% in FY21 to 60% in FY24. And we further expect to bring this to sub 50% levels over the next 2 years. This is on the back of adding new touch points in non-Kerala markets, like the one that we acquired recently of Bharat Benz in Maharashtra. We are also looking to acquire dealerships with other OEMs, thereby increasing the brand profile of existing portfolio in the highly concentrated or growing demographic areas as such. We will strategically diversify existing product offerings by introducing new additional brands or expand existing dealerships of the existing OEMs in relevant segments. Other areas in terms of our focus on the high margin business, which is the share of automotive distribution business and tightly monitoring our finance and inventory levels. And the second is increase of sale of services and repair business by creating a database through the sale of insurance, financial products, and contacting customers on a regular basis. We intend to add incremental service base and additional authorized service centers in the markets in which we operate to cater to additional customers and enhance our high margin service and repairs revenue. We also use our database and analytics that track vehicle owners' maintenance record and provide advance notice to them when their vehicles are due for periodic service and other services as such. We continue to train our service personnel to establish relationships with service clients to promote long-term business relationships. And in this aspect, we have one of the highest retentions across brands in terms of greater than 5-year customers. Improved product mix by a combination of sale of luxury and premium vehicles, thereby benefiting from a higher ASP and sale of after-sales services. With this, the company is hoping to improve its current operating margin, EBITDA margins, from 5% levels to 5.5% in the next 2 years. The last point in this aspect is further deepening our presence both geographic-wise and customer-wise. Geography-wise, we keep looking for opportunities, both organic and inorganic. Inorganic, we look for taking over businesses of dealers with the consent of OEMs. Organic, we look for open opportunities by OEMs in newer states and locations, setting up new showrooms and outlets. For customer penetration, we are enhancing our digital and online presence and creating awareness and making it more user-friendly and informative. Looking forward, we shall continue to deliver a strong performance geared towards profitable growth, However, it's important to note that there will be several factors beyond the control that can affect our performance, such as availability of vehicles, weather conditions, the recent floods that happened in Chennai and some in Kerala, that can sometimes disrupt operations and models not doing well in end markets. To mitigate this, we are focused on creating a wide and well-diversified portfolio and also focusing on the high-margin business. With this, I would like to hand over the call to John Varghese, who will update you on the financial performance for the quarter 4 and for the year term. Thank you.
Good afternoon, everyone. So I'll take you through the Q4 as well as the full year's performance of both operational and financial. To start off with Q4, the operational performance, as mentioned by Naveen, we have got 4 major verticals: the new vehicle business, the pre-owned cars, the service, and then the spare parts distribution. So the new vehicle business, the company sold about 11,000 plus vehicles as against 12,000 in the similar period of the previous year, which translates to about a 10% degrowth year-on-year. Whereas the total income from this was about 1,000 crores, which is about 1% higher than the previous quarter, last year's quarter of 990 crores. We have seen an upward trend in the average selling price thanks to the premiumization. So hence the ASP has increased from around 8 lakhs per vehicle to 9 lakhs per vehicle. Moving on to the pre-owned business. So the company sold about 2,400 odd pre-owned vehicles against 2,600 in the similar quarter previous year, which again translates to about a 7% degrowth year-on-year. However, the total income from pre-owned vehicles was around 80 crores, which is about 3% higher than the 77 crores that we clocked in Q4 of FY23. Meaning the average selling price here also has increased from about 2,94,000 per vehicle to around 3,26,000 per vehicle. Moving on to the third segment, that is the service business, which is our total, our focus area. Here you find that the volumes have shown a 5.4% year-on-year growth from a level of about 2,44,000 to 2,57,000 in this quarter. Total income from vehicle services and repair business stood at around 225 crores, up by about 21.9% from about 184 crores in Q4 of last year. Here again, the average selling price has increased from around 7,500 per vehicle to about 8,700 per vehicle. The fourth segment, that is the spare parts distribution business, clocked a total income of about 66 crores, showing a year-on-year growth of about 7.4% from about 61 crores in Q4 of FY23. This is as far as the operational performance is concerned for Q4. Coming to the financial performance of Q4. Due to all the above that I mentioned, the total income for the quarter stood at about 1,372 crores versus 1,311 crores of Q4 FY23, which translates to about 4.6% YOY growth. While the growth on top line was 4.6%, the EBITDA, however, has increased by 20.9% from about 58.7 crores last year to 71 crores in this quarter. The EBITDA margin stands at 5.2% in Q4 of this quarter. The PAT likewise has grown by over 40.3% from 14.3 crores of last year quarter to this year's quarter of 20.1 crores. Sorry, 14.3 crores, sorry, not percent, crores. The PAT margin stands at 1.5%. So always if you look at these segments, the 3 major segments as PV, CV and EV, the passenger vehicle revenue has, there's an increase of about nearly 4% YOY from about 718 crores to 745 crores. CV is about 3% increase from about 513 crores to 528 crores. And EV revenue has increased more than 100% from, of course, a very low base of about 11 to 12 crores to 23 crores. This is as far as the quarter is concerned. I'll move forward to the full year's performance of FY24, starting again with operational data. New vehicles is concerned, we sold about 46,665 units versus 47,820 units of last year, showing a marginal degrowth of about 2.4%. As mentioned by Naveen in his, earlier, that if not for some of the OEM's support, we would have done better last year. However, in spite of a lower volume, the income per se has grown by 15.8% from about 3,500 crores to 4,000 crores in the new vehicles segment. Hence, meaning the average selling price has increased from about 7.5 lakhs to about 8.89 lakhs, largely on account of sale of premium vehicles. The pre-owned vehicle segment was here also there's been about a 9% degrowth, about against 11,800 of last year. We have degrown to 10,698. The income shown a marginal degrowth of 0.3% from about 359 crores last year to about 358 crores this year. The ASP has increased from over 3 lakhs to 3.34 lakhs. Coming to service and repair business, the volumes have increased by 10%. From a 9.5 lakhs volume, we have crossed the 1 million mark. We are at 10.53 last year, as far as volume is concerned. And if you come to the income part of it, there's been a 21% growth compared to last year. From a 714 crores turnover, we have grown up to 865 crores in this financial year. The average selling price has increased from 7,460 to 8,210 per vehicle. Spare parts distribution likewise has shown a double-digit growth. They have grown by nearly 14%, and their business total income booked is about 263 crores, from a level of 231 crores in FY23. Moving on to the financial performance, as mentioned at the start of FY24, we expected a higher growth. However, due to unforeseen events in H2, which was beyond our control, which hampered the growth trajectory, we faced multiple external challenges such as the floods in Tamil Nadu in December 23 and non-availability of cars of one of our OEMs in Q4. If not for this, we would have ended up at FY24 with much better revenue and profitability growth. So, coming to the total revenue, the total income for FY24 stood at 5,646.7 crores against FY23's 4,892.6 crores, which is basically a 15.4% growth compared to previous year. EBITDA has shown a 21.8% growth from a 234.8 crores to 286 crores. The margin stands at 5.1% for the current year. PAT shows an 18.7% growth from a 64.1 crore to 76.1 crore. The margin stands at 1.3%. Well, please do note that this PAT also includes an exceptional income of 1.6 crore. Basically, there was a sale of some land which was acquired by the government. So that income of 1.6 crore is included in this PAT which we have mentioned. Segment-wise, if you look at it, passenger vehicle revenue grew by 9.7% from 3,000 crores to about 3,300. Commercial vehicle grew by 24% from 1,500 to about 1,900. And EV revenue grew by 51% from about 56 crores to 85 crores. Moving on to the balance sheet, typically our working capital requirement is about 10 to 15% of our revenue. And in terms of number of days, we normally typically have, we keep about working capital of 40 to 50 days, which includes a 1 month inventory on an average basis. The ROCE is about 17.7%, ROE is 11.6%, ROA is 3.9%. The interest coverage ratio is 2 times. Debt to equity ratio is 0.7. Debt to equity is 0.6. Net debt to equity is 0.6, and net debt to EBITDA is 1.3. The cash we generated from operating activities is approximately 80 crores. Other updates, we're pleased to inform that the board of directors have recommended a final dividend of 50 paisa per equity share of face value of 2, which is subject to approval at the ensuing AGM. The IPO proceeds of 250 crores that we had taken primary issue, of which 192 crores already has been deployed for debt reduction via repayment or prepayment in full or part of borrowings availed by our company and also certain of our subsidiaries. And the company will see benefits of financing cost savings in coming years. Credit rating, I would like to mention that the flagship company, Popular Vehicles, have got upgraded to A category from BBB+, whereas two of our subsidiaries also likewise have gone from the B category to the A category. We have a network expansion at Trouble Motors, one of our subsidiaries in the Bharat-Benz dealership, which is a 100% subsidiary of Popular Vehicles. So they inaugurated a 3-year facility exclusively offering Bharat-Benz vehicles in east of Nagpur in the state of Maharashtra. This is the 5th touch point in the state, expanding our non-Kerala footprints. Last but not least, it's been a great pride. I want to share that for the 5th consecutive year, the company's own subsidiary, fully owned subsidiary, that is Popular Auto Works, that is the JLR dealership, and Vision Motors, which is the Honda dealership, received the Great Place to Work certification. This is the 5th year in a row, which shows that organization is committed to excellence. That's all from my side. Now it's open to Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Chirag Faloke with Ratnatraya Capital. Please go ahead.
Hi, good afternoon. Thank you so much for the opportunity. I had a couple of basic clarification questions given it's the first call. Please bear with me. Just a couple of bookkeeping questions first. Could you highlight for us the year's pre-Ind AS or Ind AS adjusted EBITDA for the overall company as well as just the services business? Will that be possible to highlight?
Basically, because of Ind AS, our profits have reduced by nearly about 18 crores due to the Ind AS effect. But the Ind AS, the portion of Ind AS effect has gone to interest and depreciation. I'll just give you the figures just a moment. Whilst I take the figures out, you can ask the next question.
Perfect. And those figures, I actually just want the EBITDA after the Ind AS, so basically subtracting the real rent for both the overall business and the services business only, if that's possible. So that's the first question. The second question I had was on the gross profit for new cars. Approximately, could you share that number with us? Typically for the new car business, on the ASP level, what gross profit would we make when we sell a new car?
When we sell a new car, we typically get about 8% gross profit. And coming back to your earlier question on the Ind AS effect, there's a lease rental of about 76 crores that has gone below the EBITDA. But having said that, as I mentioned earlier, the PAT has reduced by 18 crores due to the Ind AS effect.
Understood. Below the EBITDA, there is a lease rental of 76 crores for the year.
That's right.
And what proportion of this lease rental will be for the services business? Is it possible to carve that out, or?
Services business in terms.
Just for the services business.
To get back to you with the numbers, we'll send it across to Shirish and probably they can share.
Yeah.
All right, perfect. No worries, sir. The third question I had, and I'll get back into you after that, is the distribution of spare parts business. Whatever spare parts are used in services, how do we record the revenue for that? Could you just explain that? That would be very helpful.
I didn't quite catch that. You want to know how do we record our revenues for spare parts distribution business?
Yeah, the spare part distribution business, but I'm specifically talking about the spare parts that get used in our own body shops and in our own service centers.
Oh, no. So these are two different setups completely. So if you look at each of our dealerships, so be it a Maruti dealership, Honda dealership, or Jaguar Land Rover dealership, they directly source spare parts from the OEM. That's Maruti, Honda, etc. And that's consumed within the workshop on specific cars. So the margins of that on an average is around 18% gross margins in terms of spare parts within the workshops. The spares distribution business is a completely different business It's run by one of our subsidiaries, which is called Popular Auto Dealers Limited. The way that is, they source the spare parts from the OEMs, but they distribute to independent workshops, retailers, and sometimes to a few dealers who need a spare part in particular or whatever that is. But bulk of it is to independent retailers and to workshops, independent workshops, that's non-authorized service centers and authorized Maruti authorized service centers or Tata authorized service centers, etc. So there the distribution model is different from consumption within the workshop, within our own workshops.
Understood. So within the workshop, the spare parts are that's completely separate from that vertical.
That's completely separate. So that inventory holding within the company, all that is completely different from our spares distribution business. There's no overlap there.
Understood, sir. I'll come back in line. Thank you so much.
Thank you. The next question is from the line of Raghunandan NL from Nuvama Research. Please go ahead.
Thank you, team, for the opportunity. Thank you, Naveen and John, sir, for comprehensive opening remarks. Sir, firstly, in FY24, Kerala market conditions were muted. Are you expecting an improvement in FY25? Can you talk a bit about the catalysts which should help an improvement? Also, if you can talk a little bit about market share gains for Popular across various dealerships in Kerala.
Okay, so in terms of FY24, yes, Kerala market was not, so that happened for the last 2-3 years. But in terms of all primary indicators that we've been speaking to banks, financial institutions, and other related like real estate, etc., they're hoping for a recovery from this year and going forward. So about 5 to 6% recovery this year and going forward as such. So we're hoping that the market would be up. In terms of market share, Maruti, which has gained market share year on year, and currently the Kerala market share is looking at around 51% for Maruti, in Kerala specifically.
And what would be your market share in the regions you operate? Are you gaining market share there?
Yeah, so we are more or less in the same market. So we are around approximately between 25 and 26% in terms of the Maruti market share. In terms of Honda, we are around approximately 33%. And the other markets in Tata Motors commercial vehicles in Kerala, we are approximately 77% as such. Similarly, if you look at, so we are not in number one in terms of sales market share in either in Kerala or in Chennai. We are number 2 players. But in terms of service, we are number 1. In terms of body shop, also we are number 1.
That's wonderful.
But in terms of Honda and in Tata commercial vehicles and Bharat-Benz and JLR, in the markets that we operate, we are number 1 in both sales and service.
Thank you for that. And for Maruti and Tata commercial vehicle, for FY24, would you be able to share the vehicle sales and service volume?
Sure. Just give me a minute.
So for Maruti, the total sales in FY24 is 29,334. And for Tata commercial vehicle, it is 8,762.
Got it. And service volume?
Service volume for Maruti, it is 7,32,000. And for Tata, it is 1,56,690.
Got it. And when you gave the sales number, would it include the pre-owned sales also, or only the new one?
Pre-owned is another 10,000 odd numbers.
Got it, sir. And one of the biggest enabler of growth is the network expansion. FY24 that way has not been as aggressive as we were in the past. But how do you see FY25 and 26 in terms of sales and service network expansion? Any targets you can share?
So as per the current plans and based on the work in progress and everything that's happening, we will have 3 showrooms, 5 smaller sales outlets, 3 pre-owned car showrooms, 16 service centers, 4 retail outlets for the spares distribution. So that's the plan. Totally about 31.
This is excluding the inorganic. This is only the organic growth that which we have planned for. Inorganic, as and when it happens, will be added to this.
Thank you. For any follow-up questions, requesting you to come to the question queue, please. The next question is on the line of Nilesh Doshi from Prospero Tree Financial Services. Please go ahead.
Thanks for the opportunity. Thank you to the management for detailed opening remarks. It was very informative. Sir, my first question is regarding the Popular's growth versus the OEM growth. Say, if the Maruti is growing by 8%, whether the Popular is matching that growth rate, or are we performing below or above the growth of the OEM?
So market to market, it varies. So, and in terms of brand. So in terms of Maruti, if you look at last year in Kerala, we were approximately 1% lower than the OEM growth per se in terms of sales. But in terms of service, there is no OEM growth. But overall, in terms of service growth, we were higher than all rest. If you look at Honda, approximately the same numbers. We've been holding on to our market share, so it seems in terms of growth and in terms of with the OEM, it's a similar thing. Again, in service, we're growing it faster than all other dealers. In Tata Motors, since there was an appointment of about three or four smaller dealers last year, financial year, our growth vis-a-vis the OEM growth has been lower, but in terms of market share, we have more or less maintained. We were at around 80%, we are now around 76-77%. So this is in Kerala. In Chennai, if you look at it, it's in terms of both OEM growth and our growth is approximately the same for all the brands that we operate. In JLR, we are at a higher growth than the OEM growth in Karnataka per se. But in there is no correct measure to do it, but we are at a higher growth in Maharashtra than the OEM growth in Maharashtra.
But more importantly, as mentioned earlier, our focus is on service, and that is where our growth, our expansion, as just now Raj mentioned about our expansion plans next year and even the past also. Our focus is on expanding the service pie of it, where the profitability is better, and which increases our returns on capital and return on capital employed.
So if the service is the higher margin business, what is the exact strategy company is employing to grow the service and spare part business?
So a couple of initiatives. Within service also, if service contributes about in excess of 50% of our total EBITDA, but within that, 76% is contributed by the collision repair, which is a body repair, dent, paint, etc. So one couple of initiatives that we've taken on ground is one, vehicles that is coming for running repairs as well as the regular periodic maintenance. How do we convert them into body shop? If there is some small scratch, dent, etc., we have a personalized video messaging system whereby we show that to the customer and the service advisor engaged. So we track workshop-wise service to body shop conversion. It used to be about 6.57%, say about 2 years back. Last year it is at about 11.5%. So that's one metric that we track. Second thing, we have about closer to 10,000 employees across the group, across brands. So in every district we have WhatsApp group. So there is an employee referral. So every day, employee referrals come in. And for the Maruti business, if I may talk about it, in a month average 3,000 numbers comes in through this reference. Then the other thing, we also have field executives who kind of focus on, tie-ups with police stations, insurance companies, these small retailers or shopkeepers in heavily accident-prone areas so that we get the first call. So those are some of those strategies on ground to take the body shop revenues up. In terms of the regular PMS, we have a call center which does service marketing, reminding the customer before the due date and getting him. And we also have specialized packages like monsoon package, beat the heat during summer, which is a mix of AC and a few other things. The monsoon packages in terms of wiper, brakes, etc. So such packages are there, and we market it proper for increasing the customers to come in.
So does it mean that suppose the automobile industry is growing by 7 to 8%, our spare part business will grow by more?
Yes, in fact, it's reflected in the performance of FY24 itself. As mentioned earlier, the sales volume had actually degrown. Could it be because of service and the focus that we're giving on service, we were able to show much better profits, not only profits, the profitability. The EBITDA margins have improved, so also in all other aspects, we are much better than what we were in FY23, thanks to the service business which has been sustained.
Thank you, Mr.
And moving forward also, this will be a strategy as mentioned by Raj earlier. Nearly 16 this year in FY24, Kariban about 7 or 8 service centers were established organic. Next year our plan is 16. I mean, nearly double of what we did this year. So that is where our focus will be, and in fact the EBITDA margins have been improving year on year on service. Today as we speak, the EBITDA on service is about 19%, which about 3 or 4 years back it was about nearly 12 or 13%. Even we have another ratio, as we mentioned to you earlier, we have a metric called service to sales ratio. Normally, typically all the big OEM and the dealerships, they have the service to sales ratio about 11 or 12. But for one vehicle, 12 times servicing is done for one vehicle sold. About 12 vehicles are serviced. Here for us, it's more than 20. In fact, we are 26, which was about maybe 20 about 2 years back, and much lower, 14 or 15, maybe 3 or 4 years back. That's the focus we're giving on service to improve to have a healthy growth. And in fact, more importantly, as mentioned, in Maruti, we are number one as far as service is concerned. Number one in the country as far as number of vehicles that we have serviced. Obviously, when you're number one in Maruti means you're number one in India, because Maruti being the biggest OEM in the passenger industry.
Thank you. Mr. Doshi, we request you to come back in the question queue for any follow-up questions. Participants are requested to limit their questions to 2 per participant. The next question is from the line of Shirish Pardesi from Centrum Broking Limited. Please go ahead.
Yeah, thank you. Navin, just 2 quick questions. Could you spend a minute or 2 saying what's the progress made in Arena in Bangalore? And my second question is that if you can spell out how last 45-50 days has panned out in specifically Kerala and South market.
So Arena and Bangalore, we have completed most of the work. So there's some pending amount of work. Hopefully by mid-June or end June, we should be able to probably kick it off. That's the target date that we have kept internally. In terms of the South market per se, so I'll go OEM-wise. So Maruti as an OEM, in terms of the Nexa numbers are still strong. Arena numbers, we are finding it in terms of overall growth has not been to the expectation that is there, also because of the changeover of the model of Swift, and that has just been launched. So we are hoping that in June we'll have a reflection of the new Swift and the numbers associated with that, and hence more walk-ins into the showroom. But it's been muted in terms of April and May in terms of Arena. Nexa has been holding good as compared to last year. In terms of Honda, April was not good, but May and June look the similar numbers as what we are averaging in the previous year. JLR, last quarter, as I think John had mentioned earlier, JLR in Karnataka, the last quarter was not very strong because there was a short supply of some of the CPU units. Those supplies have started coming in, and I think all of you would have read in the papers also that on Jan 24th, JLR has started producing Range Rover and Range Rover Sport within India, and there's been a price drop of those vehicles. So the inquiries that are flowing in are very strong. Range Rover Sport supplies would only start by August. Range Rover supplies have already started, so we're hoping those numbers will ramp up, and also whatever was a shortfall in Q4 of last year will be made up over Q1 and Q2 of this year. The commercial vehicle, Bharat-Benz, both in Maharashtra and Tamil Nadu, we've been holding on to our numbers. What we've seen, what we've given as guidance in the past still holds good. So both April and May, we're meeting those numbers. Tata Motors, the tipper segment, both in Kerala and Tamil Nadu, has been a bit muted, but overall numbers remain the same because of the offtake of the education institutions in terms of school buses in all these markets. So numbers per se, there wouldn't be too much of a difference, but in terms of the mix of numbers, there's a difference. Ather, if I look at it in two-wheeler, Ather, there's been a change of model, and also because of the FAME, in terms of uncertainty, the numbers in April and May are far lower than what the numbers were in Jan, Feb, March. But with the new launch that they're launching in terms of Rista, the vehicle that it will come into supply from this month onwards, that's in June onwards, the numbers should pick up quite drastically. Piaggio last year was also underperforming in terms of numbers because of the FAME issues. This year also there's no pickup of the EVs of Piaggio as such. It will still remain muted, but that doesn't add too much of a turnover to us, so not very significant per se. So this is the overall scenario.
That's really helpful. One last follow-up. As compared to Jan, Feb, March, or maybe particularly Jan, Feb, how the discounting is panning out in last 30, 40 days? Is the intensity has gone up, or maybe it can pick up?
No, there's no major change. It remains at the same levels as that.
Okay. All right. Thank you.
Thank you. The next question is from the line of Pranay Roop Chatterjee from Burman Capital. Please go ahead.
Hi, thanks. So I have only one question, and it relates to Honda. So Honda Elevate has sort of, not been able to counter the drop in Amaze and City sales since some of the key models were discontinued in April last year, right? So hence in FY24 also we did not see a growth number. In April and May also it's probably flat to a slight decline in terms of retail sales in Honda, and this is despite a lower base in last year April and May. So I'm just trying to think in terms of new Honda sales per outlet basis, right? Taking out the impact of new outlet additions. In terms of same store sales, when you see improved positive growth from Honda again, like is it fair to say that might only happen after the new Amaze is launched in the coming festive season, or is there any other trigger before that?
No, we also don't see too many triggers to that. In terms of Elevate, if you look at the numbers that were slower in the past, it's also because there was a mismatch on terms of supply of models. So Elevate, approximately 70% of all inquiries and sales are happening in the automatic transmission, and initial supplies are skewed towards the manual transmission. Over the last 3 months, they've been able to correct this in terms of the mismatch of the transmission thing. So overall, Elevate numbers should see some uptick over the next 2-3 months. But as you correctly said, same-store sales picking up to a much larger extent will happen only post the new Amaze uplift completely new Amaze comes in.
Got it, sir. That's it from me. Thanks a lot.
Thank you. The next question is on the line of Jainam Madeja from Solarity Investments Manager. Please go ahead.
Hello. Thank you for giving me the opportunity. So my question is on the service side, like when you say that you have a 22x service to new car sales. So given the fact that we are catering more towards the mass segment, so like are we acquiring customers from other dealers for the service market? Is it something like that?
Yes, we do. We get one is in terms of retaining our own customers. The second is, like I said earlier, when I was talking about how we build the body shop revenue, we were talking about employee referrals. So all those body shop vehicles that come to us would have been sold by anybody. But once they start an interaction with us, we start selling insurance to them. Then we have their number, details, everything. So when their service gets due, the regular service, as per the due date, our service marketing team, which is largely, we have a call center with telecallers, they call and get them on board. That's one part. The second thing is also we have a dedicated telecalling desk for insurance renewals, where also we have various sources to collect data. So all that insurance related closures that we do also will be cars sold by anyone. So once we get that interaction, we bring them. That's how we were able to kind of build that service to sales ratio that John was talking about some time back to a level of 26, while nationally the big dealers are in the range of 12, 13 or 14.
Just to add what Raj mentioned, just to give you some data. Last in FY24, we did renewals of nearly 241 number cases of renewals. If you translate this to the number of vehicles that we sold, Even if we add the number of vehicles for the last 5 years, it is less than 241. So the point being that we are not only taking renewals from our customers, we are taking renewals from dealership vehicles also.
Okay, understood. And my second question would be on the showroom and service level economics, service center level economics. Can you give me some numbers regarding how much does it cost to organically acquire a new showroom and a new service center, and how much revenue do you make from each service center or a showroom?
Okay. So, for example, a new sales showroom, organic, if we have to build, it will cost us about 3.5 crores. Now, the inventory level that is left, that is required, so each sales center typically would sell about 150 vehicles per month. So, and each time, if I have to take Maruti example, a vehicle will cost about 7 lakhs. So 7 lakhs, 150 vehicles per month, and if we keep 1 month inventory, the inventory would be about 10 crores. So 3.5 crores initial capex plus 10 crores of inventory would be about 13.5, 14 crores of capital employed. That's on one side. When you look at the revenue side, as mentioned, I think we mentioned earlier that we get, last year we got an EBITDA of about 2.5%. 2.5% EBITDA in sales. So the top line, as I mentioned, if you do 150 vehicles, that's 7 lakhs per vehicle for 1 year, the top line would be about 100 crores. So 100 crores, if you take about 2.5, it comes to about 2.5 crores of return on a capital employed of about 13.5 crores, which translates to about 15% ROC for sales. Now we come to service. Here again, capital employed will be the same range of about 3.5 crores per service center, depending on the size of bays and space. But typically, we spend about 3.5 crores. Inventory, as far as inventory is concerned, there's hardly any inventory in service, only the spares, so that comes to about 25 lakhs. So typically, capital employed is 3.25 crores. When it comes to the financials, the P&L, you find that the per vehicle we get about 6,500 rupees per vehicle. And typically we do about 800 vehicles per month. So that translates to an annual revenue of about 6 crores. And as I mentioned earlier, EBITDA that we get from a service is about 19% or 20%. So 6 crores to about 20% comes to about 1.2 crores, which translates to about a ROC about 30%. Hope I've answered your question.
Understood. Thank you.
Thank you. The next question is from the line of Basudev Banerjee from ICICI Securities. Please go ahead.
Yeah, thanks, sir. The last question was quite informative about unit economics. A couple of things. One, post this new Swift coming into arena outlets, so many, how the retail demand through that view, or as per your experience, it's more or less the same largely, so because you are having direct experience from that, so just wanted to understand.
So we've not started selling the cars, new cars per se. We're not putting the stock. We've got one car as a display for every showroom. Even the demo test drive cars have not reached us, but bookings have started.
Yeah,
so
from booking perspective.
For us, the bookings in this month will almost double compared to our last year's monthly average booking for May. But that's initial. Now, once the car comes also, this will continue, but it will slowly taper down over the next 3-4 months' time. But as of now, it's almost doubled.
Okay, so basically monthly retail for
we sell about, to give you statistics, we sell about 200, on an average 270 cars in a month. The bookings in this month should be touching closer to a 500, slightly above 500.
Okay. And second question, sir, if I look at pan-India goods commercial vehicle retail numbers, has been quite flattish or having a negative bias. So how's the Tata commercial MHCV goods, MHCV volumes panning out under Popular in recent months, weeks?
I don't know if I've heard your question correctly, Basu, but I'm assuming you've said commercial vehicle, medium and heavy commercial vehicle, cargo in terms of numbers that are low in April and May, right?
Yeah, I'm saying that last 6 months they have been quite flattish or having a negative bias. So last April, May, how that is now panning out, any green shoots you are seeing, or is largely remaining flattish around the same absolute volume where it was in December, Jan, February?
Yeah. So when I started the call, I mentioned that in terms of commercial vehicle numbers, the numbers have actually been boosted by the bus segment rather than the truck segment, and that holds true. And will hold true for the month of June also, I think, and partly into July. In terms of truck numbers picking up, we've seen that most election years, both state and national election years, the numbers get muted, especially in national elections, the numbers get muted for approximately 5 to 6 months, and that's what we're seeing here also. In terms of, if you look at the economic growth and in terms of the overall industry, we are hoping that post-June, that July onward, these numbers would start picking up in terms of all the movement, goods movement across. So if you look at all the other numbers that are looking from the other industries, it holds good that the truck market will pick up by July or mid-August at least.
Sure. Thanks.
Thank you. The next question is from the line of Nilesh Doshi from Prospero Tree Financial Services. Please go ahead.
Thanks for the follow-up opportunity. Sir, we have a commercial, we are selling the Tata Motors and Bharat Benz commercial vehicle. Is Popular selling only trucks or everything, trucks, light commercial vehicle, bus, everything they produce, or only for a particular product we are selling?
So we are a full-range commercial vehicle dealer. So starting with Ace up to the heavy trucks, we sell for Tata commercial vehicles. Similarly for Bharat Benz, the entire range of whatever Bharat Benz produces, which is from ILCVs onwards to MNCVs.
So Tata Motors are producing the EV also. So do we sell the EV also?
Are you talking EV commercial vehicle? Yes.
Yeah, EV bus.
So the EV has come out only in two segments. One is the Ace segment. We have sold approximately, I think, about 50 to 60 vehicles so far. And in the bus segment, the EVs have still not picked up. We have given one for trial to one of the government operators.
Yes. And sir, how the higher penetration of the EV for all passenger vehicle as well as the commercial vehicle will affect our service business?
So going forward, if you look at the EV segment, right now the EV segment penetration, commercial vehicles, there's hardly any penetration. In the passenger vehicle penetration, the EV segment penetration as of now holds at 1%. Going forward, all the analysts, including some of you who are on the call, they've given a prediction of by 2030, it will go to about 17-18%, or at the highest point, about 20% in terms of EV penetration. Today, if you look at last year, FY24, the total car sales was 4 million cars. And FY30, the prediction will go to about approximately 6 million or 6.5 or 7 million vehicles. Even if you take 20% out in terms of EV, 80% of 7 million is 5.6 million vehicles. So in terms of the scope of the ICE engine or the hybrid engines going forward, the numbers that are going to be there, and with our multiple of 26 cars for every car sold, there's still a huge scope for service that way. Having said that, in terms of, I think at the beginning of the call, in my introductory remarks, I mentioned that approximately 50% of our EBITDA comes from service. And of that, more than 70% or closer to 80% comes from collision repairs. And whether it is EV, ICE engine, or whatever it is, given the road conditions across India, given the driving conditions across India, we are assuming that these are not large collisions, but small scratches, everything. So this would continue. So the more vehicles on road, the more the probability that's it.
And sir, being the second largest dealer of the Maruti, do we have any better business terms with the Maruti?
Not specifically in terms of allotment and things of that sort, but there are favorable terms in various other aspects in terms of the bargaining power that we have with a lot of ancillary things. Could it be with paint, oil, accessories purchase, and various other things. So those would definitely help, and also with the banking system as such, and finance and insurance system.
Do we have any plan to expand the JL presence from Karnataka to another state?
Yes, so not just JLR, but across a spectrum of OEMs that we handle, we are looking at expansion beyond the geography areas that we are currently present in.
No, but I'm asking because the JLR is present only in the Karnataka, and we are basically from the Kerala, but we don't have a JLR showroom at the Kerala or Tamil Nadu. Do we have any negotiation, or do you think to go for the JLR in these two states?
So we have kept our options open. We have spoken to them about expansion also in other states. So those dialogues are on.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Jainam Madrecha from Solidarity Investment Managers. Please go ahead.
Hey, thank you for giving me opportunity once again. So my question was, I had a follow-up question on my last question. So I wanted to understand, like, if we are focusing more and more on the service centers, we are trying to increase more service centers. Won't OEMs take any actions on this, because for them the main business is their new vehicle segment, and if we are not focusing on new showrooms, won't there be any action from their side?
So there's no question of not focusing on new car sales. So that focus is also there. What we're trying to say is, when we had started the conversation, we had talked about, in terms of the new car showrooms, we have approximately 61 showrooms, but we have approximately 142 service centers. So in terms of the expansion, it is twofold in terms of service centers. That's what we meant.
And just to add on to what Naveen said, it is not, as you mentioned, it's not that we don't focus on sales. What we are saying is that service we do not only of the service of our vehicles which we sold, we do service of other vehicles which were sold by other dealers. That's how we said we are focusing on service, so that we have a healthy financial.
Understood. And is there anything like some number of service centers we need to cover? Let's say if you are opening a showroom in New India, how many service centers would be needed to cover the service requirements from those showrooms? Like, if any customers buys from that showroom, is there any number of service centers that we need to put up around the showroom to cater to those new demands?
Yeah, so it is not just that if we put up a showroom in, say, Nagpur, if the number of service centers to cater to, for example, if we put up a Maruti service center, a Maruti showroom in Nagpur, how many service centers are required in and around? We also look at the total population of vehicles that are already there in the system. So when we open up, it's not just our showroom that we're catering to. We're also looking at the car park that has already been built up over the years, and we look at an 8 to 10 year car park, and then decide how many showrooms are required within a range of, say, 10 to 20 kilometer radius. That's how we look at it.
Okay, understood. And
an example of the inorganic the acquisitions that we've taken the last 2-3 years. We took up a Maruti dealership in Kerala, which was a well-established dealership for many years. So when we took over, they had plenty of sales showrooms and service centers. We took very limited showrooms, whereas service we took in fact 2 showrooms, but service centers we took about 11. We did take a few of the sales showrooms. Very consciously we did that. Similarly in Maharashtra, when we took over, it was basically 2 showrooms, and there were one showroom and 8 service centers. I mean, that's how we strategize.
Understood. And when you say that we are like the service, does this include also the pre-owned that you sell, like these pre-owned buyers, do they also come for the service to you only?
Yes. So we also in pre-owned cars, so we approximately sell about 700 to 800 cars of pre-owned. In that, approximately 150 cars we sell with a popular warranty. So they will come back to us for service anyway. So, but we are also targeting to ensure that we cover the larger spectrum. But out of the 700, 800 cars that we sell in the pre-owned car segment, approximately 60-65% would be Maruti and remaining would be other models. So in terms of capturing the Maruti and in terms of Honda, etc., we capture. But some of the other OEMs will not be able to capture service. But bulk of it we do.
The Maruti True Value, just like a new car, we offer, free service also initially, the three of them. So then our service marketing team calls them, so they come and then the association starts. So that's how we retain them. So even if it is a used car sold, we don't allow them to go and service elsewhere.
It's a complete package that we offer. If once you buy a vehicle, whether it's servicing, whether by touch wood, you meet with an accident, the insurance claims with the insurance companies, the renewal of insurance, driving school, selling your cars, the second-hand car for the pre-owned. So the entire scope we do, we take out the entire life cycle of the vehicle that the customer has.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Naveen Philip for closing comments.
So thank you everyone for joining in for our first earnings call as such, and looking forward to giving you clarity on all the questions that have been asked, in which we probably need numbers we share through Shirish or STA as such. Thanks once again and have a good day.
Thank you. On behalf of Centrum Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.